And the biggest cue this morning, the minutes from the Fed meeting, officials expressed concern about the pace of inflation as they hinted at more tightening. While there was agreement that inflation is unacceptably high, there was also an indication that a number of tentative signs that inflation pressures that could be abating. Now remember that the latest increase brought the Fed's key borrowing level to a range targeted between 5.25 to 5%, and that was the highest level in more than 22 years.
And shifting focus to the United Kingdom then, in some positive macro data coming in, the inflation has eased to 6.8% in July from 7.9% in June. The fall in inflation is due to lower electricity and gas prices. Inflation in UK is much lower than it was at its peak of 11.1% in October last year, but it is still high and remains high compared to the Bank of England's 2% target.
And Foxconn has begun the production of the iPhone 15 in India as the company is moving forward with the effort to diversify its manufacturing from China. And Foxconn's Strive Perambadur plant that is getting decked up to deliver new phones weeks after they have begun shipping from China-based factories.
And all eyes on the box office then, because Barbie has turned out to be the box office queen by topping $537 million, making it the highest grossing domestic movie for Warner Brothers. Discovery's 100-year history, the movie has surpassed Christopher Nolan's The Dark Knight, which generated $536 million back in 2008.
And after a disappointing macro data from China, semiconductor giant Intel has terminated its acquisition of Israeli chipmaker Tower Semiconductor as it said that it has failed to get the regulatory go-ahead in China. Intel will have to pay a termination fee of $353 million to Tower, and in a reaction to the news flow, the shares of the Israeli company that has tanked 11% in the pre-market session.
Alright, with that, let's shift focus to China then. And yes, it is the second straight month that we've been getting disappointing macro data from China. After disinflationary trends and a worsening trade scenario, the macro indicators we're getting now are forcing investment banks around the world to cut their 2023 growth outlook for China. The wave of downgrades highlights the danger of the world's second biggest economy missing its official target of around 5% expansion for the current fiscal. Let's break this down and get an analysis of the likely impact. First, here's my colleague Ashesha with the factors leading to concerns over China's current economic crisis. Ashesha?
Well, yes, Chinese economy has been facing headwinds for the last many months, and the post-COVID recovery has been rather muted for the Chinese economy. Weakening consumer sentiment and weak property market is why Chinese economy has been lagging for the last many months. In fact, the month of July, economic data points for the month of July have also been lower than what the street was working with. Retail sales rose by about 2.5%, below analyst expectations of about 4.5%. Industrial productions, meanwhile, also came in at 3.7%, lower than analyst expectations of about 4.4%, and on a month-on-month basis, unemployment has also risen, which means economic data points for China have been rather muted and below what the street was working with. In fact, economists now say that the second half of the year could be worse, and Barclays has actually gone ahead and cut GDP estimates for the full year. They've cut their GDP forecast to 4.5% from their earlier estimate of about 4.9%. So the Chinese government or the policy or the Central Bank of China actually has gone ahead and cut key policy rates in order to boost the economy. This has come in as a surprise move where medium-term rates have been cut by about 15 basis points and they now stand at 2.5%, and short-term rates have also been cut by 10 basis points. Analysts, in fact domestic analysts now say that the best of the commodity upcycle is perhaps behind us and that headwinds are expected to continue for some more time.
And with that, let's slip into a short break. More news and updates on the other side of the break, so stay tuned on the channel.